Welcome to Markets Now. I'm Michelle Rook along with DuWayne Bosse with Bolt Marketing, and we're seeing higher prices in all but cattle futures as we move through the mid-session. And after the big sell-off in the grains yesterday, how much of today's bounce in the grains, DuWayne, is just kind of a corrective bounce? Did we get overdone?
I think a lot of it is just that corn market was horribly oversold, and we need to maybe correct that just a little bit. And USDA was a bearish report all the way around, and we hit the sell button really hard yesterday, or traders did anyway. So maybe a bit of a recovery today. Forecast is still pretty good for the Midwest. Maybe the Northwest part of the Corn Belt looks a little drier than we'd like over the next, 2 weeks. But honestly, me living up here in that area, we could use a little heat and have plenty of moisture right now anyway.
Outside markets also seem to be kind of helping out.
Yeah, I think that's actually a big driver as well. US dollar down over 500 points today, below that 100 mark, and more importantly, down to like a 15-month low, if I am looking at that correctly. That's a big deal. I'm a big bear in the grain markets right now because we need to see better export demand. Well, one way to get better export demand is to have a lower US dollar.
No doubt. Weekly exports, though, your thoughts there? It looked like we saw a little bit of an improvement in corn, but we're still lagging pretty much in everything, aren't we?
We are still lagging, and that's a problem for me and kind of why I'm bearish. The corn number was fine, but the new crop program is slow and behind. And USDA, yesterday projecting a 450 million bushel increase year over year on corn export demand. If Brazil's crop size, that second crop, is as big as I'm anticipating, I think we're going to have a problem getting to there, unless one of two things: the US dollar keeps trending lower, or December corn goes a lot lower in prices. We got to get to a point where we can compete with Brazil for that export market.
All right. Conversely, let's talk about what USDA did to demand exports in specific in the report yesterday. Lowering new crop, 125 million bushels. Is that justified, or is that realistic, do you think?
Yeah, they did that for the soybean market, which was a little interesting. One of two things they were doing that for. One, either because they see the huge Brazil crop down there, their soybean crop, and China's buying that. China's ahead of normal pace for buying beans, and just USDA is forecasting our exports to be down. I can buy that story. The second story is USDA really hates putting an ending stock number below 200 million bushels or even 300 million bushels. So they left it at 300 million bushels. And if you work backwards, they had to decrease export demand 125. So there's two stories there. Maybe both of them are just a little bit correct.
So following up a little bit on the WASDE yesterday, do you think that now that we've got these lower acres figured in and whatnot, do you think that the high for the November contract has been set already, because we couldn't take out $14 even when we lost the 4 million acres?
Yeah, I think $14 is a tough ceiling for us to bust through right now. We could maybe go up and test it, but to get through $14, you're going to need some sort of weather scare during that key month of August for soybean development. Otherwise, I don't see a reason to be above that. Now, because of the tight situation, I don't see a reason we really have to crash below 1250 either. So I'm telling our producers, above 1350 here, I think is an okay place to do some hedging.
And specifically on the WASDE, USDA did cut corn yield by 4 bushels per acre. Do you think we're going to have bigger cuts coming forward or not?
If you read through that report a little bit, the USDA was pretty big in saying that, they decreased the yield because of the hot, dry June. And obviously the crop conditions are showing it should be decreased even more. But they pointed out that the weather in July, which is more important, has been pretty conducive for good corn production. And the forecast looks even better moving forward. So I think USDA was hinting that yield actually could creep up in upcoming reports. So watch the crop conditions. Don't worry about the percentage good to excellent as much as which way is it trending. And lately we've been increasing a little bit. So that tells me yields could increase.
Yeah. And how much yield loss would we need to have to get under 2 billion bushel ending stocks on corn?
You're going to have to go below 170, I think. I think you're going to have to get down around that 169 because, of course, remember, I think export demand is going to be lower than what USDA is forecasting right now.
All right. Wheat up today. Is wheat just a follower of corn and soybeans, or are we getting a push from this dollar?
I think we're getting a little push from the dollar. Normally, I'm quick to say wheat's just a follower, but for the wheat complex, if the dollar's down sharply, usually the wheat market's up, and that's what we're seeing today. spring wheats maybe got a little bit of a story. USDA did come out with lower yields than trend, but it was so hot in June up here in the northern plains, and that really hurts a cool season grass like spring wheat. So you might see the yield decrease a little bit more. The problem is we still have enough wheat in the world, and Ukraine's production has actually looked to increase slightly. So it's not a crazy bullish story like we had a couple of years ago.
I mentioned cattle are down, some follow through selling after what looked like a key reversal in live cattle yesterday. Was that a blow off top?
It sure looks that way on the chart right now. Now, you're talking to a guy who was a little bit bearish that cattle market, thinking that maybe we follow just the seasonal tendencies and just kind of grind lower during the dog days of summer. So I was really surprised to see the futures market spike up, because it did it without the cash market really going higher, and cutouts were trending lower as well. So might have just been some fund action in the futures market, maybe some technical traders. And yeah, if you're a technical trader, that does look like a blow off top. So it wouldn't surprise me.
Yeah, it does. Hopefully that won't pressure the cash here. I haven't seen much this week.
I haven't seen that much either. And I think Packers are in a bit of a tight spot. They may have to pay up more than they want. Kill is running pretty good considering the holidays here recently. So maybe steady money, but even that's kind of a victory.
And Hogs back up today. It feels like the cash market just kind of continues to hold that market up. But we're also looking at the export report this morning, seeing more China business. Is that a hopeful sign for that market?
I think it absolutely is. We've seen the last couple of weeks, China is actually selling some pork out of their reserves. And the next statement they release is that they will restock those reserves by buying pork in the export market out there. So yeah, hopefully that's all from us. And it is bullish for our hog market. And yeah, it's a nice upward trend domestically. Demand looks good too. It looks like pork got just too cheap here, and demand started to pick up, which happens at lower prices.
Yeah, we'll see if we can keep going, because we still haven't taken out last week's highs. So
no, right. Chart pattern, it'd be nice to take that out, wouldn't it? Otherwise, the technicians get a little bit bearish up there.
Well, thanks so much for joining us, DuWayne Bosse with Bolt Marketing. That is Markets Now.